One thing a lot of people are doing today, especially because of how expensive housing has become, is they are looking for alternatives. And one of the most popular choices for a lot of people now is buying a manufactured home. And a lot of people are looking at these mobile homes for sale and thinking, wow, this is a great deal, especially compared to a regular house. But there are things that you should know before buying a manufactured home, and some questions you want to ask about them before diving into it. Because, one of the main things that's different about buying a manufactured home or a mobile home, anything like that, versus a traditional house is those places actually tend to lose value over time. Not always, but traditionally they do. They actually usually depreciate more like a car than appreciate like a regular traditional home would. And a lot of people don't probably realize that because they just think about real estate. Oh, real estate always goes up, which is also not true. But the price can be very convincing, because on average, a new manufactured home costs only about 1/3 of a traditional house. But there are some obstacles with buying a manufactured home, mainly, where they can be placed due to zoning laws. Also, if you're looking to finance one, good luck, especially if the purchase price is going to be below $150,000. Pretty much no lender will give you a mortgage, pretty much because it's not worth it on their end in order to do all the underwriting and go through the process to write you a loan on a property that cheap. They just won't do it, guys. And if you do find someone who does, chances are the interest rates are going to be notably higher than the going market rate. So the first thing you got to ask yourself if you're looking at buying one of these manufactured homes is something that everybody has to ask themselves as a homeowner. How much can I actually afford? Right now, as of the end of 2024, the average price for a manufactured home in the U.S. was $159,500 compared to the $420,000 median home price across the U.S. So you are saving a ton of cash by going this route. So it is possible that you might be able to get a mortgage if you're looking at buying one that expensive, but if not, you could be looking at paying all cash. So if you don't have all cash and you're looking in the $100,000 price range, for example, then you probably won't be able to buy one. And part of looking at how much you can afford is not just about looking at how much you can spend, but also if you are planning on financing, say you're buying a higher end one that's, $150,000, $200,000 or maybe even more, right? You probably will be able to get a mortgage for one, but don't feel like you have to get the mortgage through the sales office that's on site, because a lot of these, especially new developments where they have the manufactured homes, they'll have a sales office and they'll try to get you to finance it with them. But they're not always the best deal. So it's still important to shop around and make sure you are getting the best deal when it comes to financing, because this is arguably going to be your biggest expense, which is going to be your home payment. You also need to look at what type of financing you're going to be able to get, if you even can get financing, because depending on what type of mobile home it is, also where the manufactured home needs to be placed. And I know I said mobile home there, but I meant manufactured home. Anyways, depending on where the manufactured home will be placed, the price will determine what kind of loan you might be eligible for. Like, for example, you can get a conventional or FHA loan, which is a traditional mortgage, but you need to be able to own the land underneath that manufactured home. And if you don't, you will not qualify for one of these loans. Then you're looking at a different type of loan, a personal property loan, or maybe even a vehicle loan that can come with a much higher interest rate than a mortgage. So that can affect things drastically for you as well. These personal property loans, they're not secured by the land. These manufactured homes are titled as personal property, and they're easier to get than a mortgage, but like I said, it comes with a much higher cost of borrowing. But you really have to be careful if you're looking at financing a manufactured home, not only because the types of financing are not the same as you would normally get with a traditional house, but you have a higher chance of getting scammed because a lot of buyers don't know the rules. A lot of people don't know what to expect, and they might think they're getting a traditional mortgage when in fact they're getting a personal property loan, which is not the same thing. And that brings me right into the most important thing about owning a manufactured home, or a mobile home for that matter, is will you own or lease the land you are going to put it on? Now, before we even go any deeper into this, I recommend to everybody who is going to buy one of these things that you own the land for a lot of different reasons, which we'll go over here. But if you don't, it can cause you a host of different problems in the future. And what's happening to a lot of people that don't own the land, they are forced to pay a lot rent that is subject to go up at any moment for any reason, just like an HOA fee. And a lot of people are getting priced out of their own home because of this, which is something you don't have to worry about happening if you own the land underneath your home. And here's the thing too, typically the prices for these manufactured homes that are sitting on a piece of land that you don't own are usually a lot lower than the ones that are on land that you do own. In fact, I did a video a while ago, I'll put it up here so anybody wants to go take a look. I walked through a mobile home and manufactured home community up in Carpinteria, California a couple years ago, and I talked to a lady there that I think she was on the board, if I remember right. And she was telling me all sorts of stuff over there. But in this community, these people actually own the land that they're parked on, which is a huge advantage over a lot of other parks. And if you go and watch that video and listen to it, you will understand more why. But a lot of people, they end up going for the option where they're leasing the land instead of buying the land, mainly because it usually ends up being the much cheaper option. A lot of people don't want to or can't afford to buy their own plot of land and possibly hook up utilities and pay for all the things that need to be done to prepare a site to have a home on it. They would rather just go to one of these parks, and even if they're leasing the land, they're okay with making that sacrifice because it gets them in there at a much lower price and faster, and it's more convenient. But that convenience is a trick. That convenience comes with much lower property values for you in the future. Not saying you can't see any appreciation, but you're not going to see nearly the level of appreciation as you would in a park that you own the land on, or your own site, for example, that you just park one on individually. You're also subject to any of the rules or fee increases that happen at these places, and you're at the mercy of the owner. And a lot of these owners, what they end up doing is they sell these communities entirely to a developer, and even worse than having fees go up, they just end up kicking everybody out. They say, you have a year to leave, and we're going to redevelop this place into condos. You don't have a choice. So that's not really a position you want to find yourself in, especially after dropping over 150 grand on a new manufactured home. Here we have a house listed for rent for $4,800 a month back in October last year, and it's also listed for sale for almost $1.6 million as of January this year. They're saying, hey, we can't rent it, so let's try and sell it. And the house is yet sitting here empty, guys. So many empty properties here. It is just unbelievable because nobody's getting realistic with the price. But it's going to be interesting to see what all these properties end up going for. And by the way, think about this for a minute. This house is $4,800 a month for rent, right? But here's the thing. If you buy this house, you're going to be paying about $9,000 a month to live in this very same house. You have to ask yourself, is it better to pay $4,800 a month in rent or to pay double to own it? But I'd be almost willing to tell you that if you're looking at buying a manufactured home and you are only looking at options where you're going to be leasing the land, and you say, well, I'd rather live in this because it's more like a house, I don't want to live in a condo or an apartment or whatever, I would really second guess that choice, guys, because it can really come back to bite you in the future. You know, it's happening to literally thousands of people across the country every single year now, and a lot of these people are wishing they could have got out of these places. And even if the property doesn't get sold and redeveloped and you don't get kicked out, people are getting priced out of these properties to the point where they're being forced to sell them considerably less than what they paid for them just to get out of the manufactured home and have somebody else willing to take on, you know, $1,000 lot rent. Because that's not what people are looking for when you're going to buy a manufactured home. You're looking for affordability. So in my opinion, you would probably be better off just renting an apartment somewhere or renting a house somewhere like the place we just looked at, because yeah, you can still get kicked out and your rent can also go up, but you're not going to lose this huge investment that you might even have financed and try to figure out what you're going to do with that. This is going to put you in a much more difficult financial situation if you have to deal with something like that. Now, the next thing you also have to ask yourself is, are you ready for the financial responsibility to own this place? Because you are going to be owning your own home after all, even if it is on leased land. So you're still going to be responsible for the upkeep and maintenance of that property. Now, if you're buying a brand new manufactured home, your problems should be at a minimal, and depending on the park that you're choosing to live in, they may even provide a lot of the maintenance for the yard and things like that for you on your behalf. But just know that you are going to have expenses you didn't have as a tenant. You might have property taxes if you own the land. You're going to have insurance. You're going to have upkeep on that property that you didn't have as a tenant. And so even though you might be saving maybe a couple $100s a month living in a manufactured home versus the house down the street that's for rent, it might actually end up being a wash in the end because of the extra money you have to pour into those items. So it's something to think about when you're looking at the most affordable and effective housing solution. And this is the prime example of something that can go wrong that you might not expect, like a new roof, for example. One of my viewers, they wrote me an email talking about how they were forced to put a new roof on their house because otherwise they couldn't get insurance for the house, which is a pretty typical scenario for any homeowner these days, including if you own a manufactured home. So they put on the new roof and they contacted the insurance company, and they had to actually prove that the new roof was installed. And initially they were told by the insurance company that they would be saving hundreds of dollars a year off of their insurance premiums if they put on this new roof, okay? But what ended up happening, once they actually put on the new roof, they only saved $34, guys. $34 for the year. They received a check for $34 overpayment. That's all they got refunded. So basically no difference in the premium, which is criminal on behalf of the insurance company, but there's not much you can do if you're not able to get insurance without putting on that new roof. You're kind of beholden to them. So they spent $15,000 on a new roof for their house to save $34 a year. Think about that. Just another big expense you have to deal with as a homeowner, regardless of the type of home that you own. You need to be certain you're ready for stuff like that. Do you have 15 grand to put a new roof on your manufactured home? Obviously it will cost less. Maybe it will be half. There's still a lot of money. You have 7 grand to drop on it in case you need that. So this might also be a good time to bring up rent, because rent prices have been steadily coming down, not by a lot, but they have been coming down due to the massive increase in rental inventory that we have been seeing. Right now, the median asking rent is $1,592, which is actually the lowest number we've seen since March of 2022, and it's down 0.4% from 1 year ago. Like I said, not big numbers, but moving in the right direction. Because back in the middle of 2022, median rents were $1,700 a month. So it has come down a sizable amount. You know, coming down a little over $100 a month helps everybody who's renting. And back in 2022, the average renter would have to earn about $6,800 a year to comfortably afford their apartment, and which was actually $5,000 more than what you need to earn today. So you can actually also qualify for a rental at a lower price point on a lower income than you could just a couple of years ago. The gap between how much renters need to earn and the income needed to keep rent affordable is continuing to shrink. At the same time, it's going in the opposite direction for anybody who wants to buy a house, which is yet another argument of why you might want to be looking at being a renter right now rather than buying any type of house, including a manufactured home. Unless you're going to put on your own plot of land, guys, that's the exception. So if we take a look at this most recent Redfin data, we can actually see the 10 most affordable metros for renters right now, and amazingly, Austin, Texas is at the top of this list. You got places like Dallas, Texas, Salt Lake City, Raleigh, Denver, Phoenix, Nashville, all places where compared to what people earn, the rent is still relatively affordable. These are all places you might want to look at if you're somebody that's looking for an affordable rental based on your income. But the exact opposite is true for this next set of cities, because these are the least affordable places for renters right now. You know, Providence, Rhode Island is number one, but right behind it, number two, is Miami, Florida, guys. New York, Los Angeles, you got San Diego on this list, you got Tampa on this list, you got Buffalo, New York on this list. And it's pretty crazy to think that Miami beats out expensive places like San Francisco, for example. Like, it is literally cheaper to be a renter in San Francisco relative to your income than it is here in Miami. How insane is that? Every place on this list I would definitely avoid moving to, even if you're going to be buying too, because if the rent is that high, buying is going to be even more expensive. So I would avoid all these cities on that list like the plague right now. The one thing that's helping to contribute to make rentals a lot more affordable now than they were just a couple of years ago is the massive increase in inventory. You know, we have built about 1.5 million new rental units over the past 3 years. Some of them aren't completed yet, but they're, you know, in the pipeline to be completed, which is a huge amount of rental inventory hitting the market, especially compared to, you know, how much inventory is being listed on the for sale market. And developers continue to get more creative with their choices as well. Like, for example, I just saw a story about how they're turning an old mall in Sarasota, Florida into a 140 unit apartment complex. I said Sarasota earlier, but it's in Bradenton. And they're gonna have 33 one bedrooms, 65 two bedrooms, and 42 three bedroom places. And the 2 and 3 bedrooms will come with 2 bathrooms as well. And people's rent payments are actually gonna be determined by their annual income. So not only is this new units being offered to people, but it's an affordable housing complex that is going to charge rent based on people's income, which is arguably what a lot of people need right now. And like many other malls, it kind of ran its course and they closed up shop for good back in 2021 due to a bankruptcy. This is the growing trend. You know, you're seeing a lot of developers pick up properties that aren't being used for their original intent anymore and are redeveloping them into apartment complexes, which is good for anybody looking to rent. And it's good for housing prices in general, because think about it. The more rents come down in price, the more appealing it is to be a renter, less appealing it is to be an owner, which ultimately drives prices for sale down as well, because it decreases demand to buy a property. There's gonna have less people interested because it's more appealing to save the extra cash being a renter most of the time. This is good for housing prices in general. They also have another apartment complex being planned for that same area, a 242 unit garden style luxury apartment complex. That's already almost 400 units, guys, in just one small area that used to be a mall. So we need to start doing more stuff like that across America, and it seems like developers are willing to do it when it makes sense. I think we're going to be on this trajectory for a while now, where renting is going to remain the more affordable option for the foreseeable future, and that is going to just continue to decrease the demand in the overall housing market for people looking to purchase, and that is going to be yet another downward pressure on home prices across the country. So just make sure you are careful in your decision and you make the decision that makes the most sense for you. You know, don't be hasty. Look at all options. Look at manufactured homes. Look at renting an apartment. Look at buying a traditional house. Look at how much it's going to cost you monthly. Make the right decision, guys. Don't just jump into it. It is a big decision to make. So if you enjoyed this video, make sure you are subscribed to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.